Hey, what's up, guys? Nick here, and wanted to shoot this video kind of going over why mortgage overages can be a little more difficult than tax sale overages, and just explain one of the aspects of what makes mortgage overages more difficult than tax sale overages. One of the things that makes mortgage overages hard is that the opening bid is not always 100% the exact debt that is owed on the property. Let me repeat that again. The opening bid for mortgage overages is not always the exact amount owed to the entity conducting the foreclosure or the bank in most cases. Whereas with tax sale overages, the opening bid is always going to be the amount of taxes owed, the cost for the county to do the tax sale. It's always for tax sales, the opening bid's 99% the exact amount owed. And so if there's anything above that, if it sells for anything more than the opening bid on a tax sale, you know there's an overage. However, that is not always the case with mortgage foreclosures. Sometimes the opening bid is less than the actual amount owed, or less than the debt owed to the lender or the bank or whoever is foreclosing. And that's why mortgage overages can be more difficult than tax sales, is because sometimes you have to dig a little deeper to figure out, okay, was the opening bid less than the debt, or was it the actual debt, the amount owed? And so I actually just, for those of you that are in the course, I just shot a video showing you how this works. How can you find out if the opening bid is the amount owed? And how do you know for sure if the opening bid is the debt? And if you don't know, how do you find out? Who do you contact? Where do you find that information? So if you're in the course, go check that video out. I just uploaded it. That will show you. That will show you exactly what you need to know and where you need to go to find out, okay, the opening bid, was it the debt owed, or was it less than the debt? Because that's very important, right? Because you could have two different numbers. And let me give you an example just so you can see this. So what you're looking at on your screen is what's called a journal entry of judgment. It's basically, it's a document saying that this person defaulted on their loan, this person is owed this much money, and this is how much. That's the simplest I can explain it. If you look here in this third paragraph, you can see here Sherman Bridge is the lender or the bank. They lent this person, Harris. They gave them $134,000, a little less than $135,000. Okay, that was in 2018. If you scroll through here, it gives you more details about what's going on. In 2019, the loan went into default. And here's what's interesting. Because of interest and penalties that have racked up with time, the amount owed is actually 144. And this was as of July of last year. And so compare this to the original amount. They owe 10 grand more than what the original loan was for. Now, if you continue to scroll, this actually goes on. More time has passed. So now we're in December of 2019. Now we're up to 155,000 versus 134, which was the original loan amount. So you can see here that sometimes property owners can actually owe more than what their original loan amount was because of interest, penalties, and all of that stuff. And depending on how much time the property was in default, meaning how much time passed from when the homeowner quit making a mortgage to when it actually sold at auction, that timeline is going to affect the debt. And if the debt rises, then the overage amount drops, right? So you have to be aware of these things. With tax sales, you don't have to worry about this stuff very much, okay? But with mortgage foreclosures, you do. And this is another reason why they are more complex. But because they are more complex, less people work them, less competition. And if you know something that someone else doesn't know, let's face it, you have a competitive advantage. And that's why I teach not just tax sale overages. That's why I also teach mortgage overages, is so that you can have a competitive advantage. So these are a couple aspects of why mortgage overages can be a little more difficult to work than tax sale overages. Is you have multiple variables that you need to account for. And so again, for those of you that are in the course, you have access to this new video I just created showing you how to account for these variables, where to find this information, so that you know what's going on and you can be informed and you can put together more deals, and also so that you can focus on those deals that actually have overages. Because here's the thing, and this is why it's important also to learn from someone that has experience, is because if you are just going off of free information and just going off of what you can find online, you may not get all of these fine little details. And so if you're someone that's just been monitoring foreclosures and just going off of opening bids, if you're only looking at the opening bid and what it sold for mortgage overages, you may be working deals that don't have overages, because you're not aware of this other factor, this other variable, which is the opening bid is not always the debt owed. Sometimes the opening bid is less than the actual debt. So just to give a brief example, just so you understand, let's say, for example, you are watching a foreclosure sale and you see that a property has an opening bid of $95,000. And you see that the property sells for $150,000. 150 minus 95. It looks like there's a $55,000 overage, right? But here's the thing. Let's take this example right here, 155. Let's say this same property sold for 150, but the actual debt is 155. Is there an overage there? No, there is not an overage. And that's exactly what happened with this property that I showed you that's associated with this document. The opening bid for this property was $95,000, but the amount owed on it is $155. So these small details can make or break a deal, and you may be working deals that aren't even good deals because of this little small detail. So that's all I have for you. I hope that was helpful for you guys. Again, guys, pay attention to these things, invest in your knowledge. If you want to learn from my experience and how I've done mortgage overages and also tax sale overages, you can always check out my course at overagesyndicate.com or direct at school.overagecourse.com. Thanks, guys. We'll see you in the next